Well, good afternoon. On behalf of the P. DuPont Freedom Foundation, I'd like to welcome you to our June E3 Lunch and Learn. My name is Stephanie Johnny, and I'm the Interim Director for the P. DuPont Freedom Foundation. Today, we are joined by Stacy Grady. Stacy is the Assistant Vice President for Small Business Banking at Bank of America. Stacy is here with us to talk to you about Bank of America's Better Money Habits program and how it can benefit small business owners. At the end of this presentation, we will hold a Q&A, so please utilize the Q&A function for your questions. Stacy, welcome, and thank you for taking time out of your day to join us.
Absolutely, and thank you for having me, Stephanie. Thank you to the foundation. Thank you to Bank of America for the opportunity. I always love when we get a chance to get in front of our small business clients, not to mention when we get in front of the small business community. When you think about the small business and small business owners, they're the pulse of America as we see it today. So with us slowly getting back to normal and getting back to life, I guess, as we knew it, this is the opportunity to help folks grow their business, stabilize their business. And this is just a few good habits that I want people to take away with their small business. So we'll go ahead and get started. I'll tell a little bit about me, as we stated real quick. I am the small business banker at Bank of America for Northern Delaware and Chester County. I assist clients with increasing business cash flow and making all business banking facets so much easier. So at the end of this call, I'll be able to answer a lot of questions for you surrounding my day-to-day, and I hope that you get something out of this. I'll be moving at a relatively high pace, at a very high level pace, just because a lot of this information is redundant information that I feel everyone knows, but I'll be answering it a little bit more granular in the Q&A session. So if we can we go to the objectives page?
Sure.
So when we talk about the objectives of growing, your small business, there's the education focuses on 2 key points. The 2 key points are managing business finances and the common mistakes that small business owners make and how we can avoid them. So we'll start with the managing business finances. So we can go to the next slide. We can go to the next one as well. Gotcha. So essentially, there's 3 steps for managing business finances. There's budgeting, there's saving, and there's managing debt. So when we talk about the budgeting piece, a lot of times with budgeting funds and business finances, you have to understand what it is exactly you can spend, and you want to understand what it is you can afford. Budgeting comes, I feel like a lot of times, people want to take risks right off the bat. And that's the easiest way for failure through your business. I think when you're inside of the business, you want to make sure you understand, 1, how to budget money, but 2, how to make your money work for you. There's an old saying, it's not how much money you make, but it's how much money you can keep. Can we go to the next slide? We can go down one more slide. So when we talk about managing business finances, here's a great tool for managing business finances. This is referred to as an interim balance sheet, and an interim financial statement. So this right here, this is huge as far as your business goes, because this serves as the paper trail, and to some degree, this serves as the anchor for how successful your business will be and how successful your attempts to get business financing, any resources that they pertain to your business. You would need to have, this is something to make sure that you have in each month, and you want to have it filled out as correct and as to the point as possible. Your balance sheet, which is the lower section of this is essentially tells us where you are today, today as it is year to date. Where is your business? How profitable is your business? What kind of liabilities do you have? What kind of assets do you have? Also, the other key point is this is great for referring back to historical trends. A lot of times in business lending, one of the things that everyone looks at is they want to look at, how did you do previously? How has your business performed year to date? What is your 3-year historical trends? Most most banks, most financial institutions, they look at a 3-year trend. So in our case right now, it would be from 18, 19, and 20, and then how you've done year to date. That paints a picture and that paints a story for every financial institution. So the more accurate, the more detailed, and the more up to date your financial statements are, I think the better you'll be in terms of reflecting on your business and obtaining any kind of financial resources for your business. We can go to the next slide. So there's certain software that can assist you, with managing your finances. There are programs such as Xero, FreshBooks, but I think the main program and the most universal program is QuickBooks. As it alludes to, this right here saves you a ton of time, minimizes errors in terms of calculation errors so that everything balances out. But also, this also saves you money, so to speak. At the end of the year, when you go to start compiling all documentation for to file your business tax returns with your CPA or whichever method you choose, 12 months in business is a long time and it feels like an eternity. But imagine trying to sift back through 12 months and you have no recollection of how your business did, or you have no recollection of any kind of numbers or financials. So QuickBooks is I highly recommend it. It is a very, very good tool, which will help you forecast accurately. It itemizes a lot of your expenses, your assets. So at the end of the year, when you reflect on a year and how you did quarter over quarter, it'll reduce errors and the calculations will be pretty accurate to the T. We can go to the next slide. So the second step is we talk about saving. Now, saving has many facets when we speak about business. Saving can be in which products you enroll in, what you invest in. It's not just about saving equity or saving capital. A lot of times it's about how can you increase your business cash flow at all facets. What do I mean by that? Sometimes that could be refinancing of your, if you have a commercial mortgage on your business, sometimes it can be refinancing that. If you have existing debt on your business, sometimes refinancing that to get a lower term, or to get a longer term and a lower rate, that could also help your business. So those are ways that you could put money back into the business. Think about one thing that's come to mind that's been a huge, huge thing this year for business owners is auto loans. A lot of business owners were unaware that there are significant tax implications with refinancing, or for that matter, getting a vehicle through your business. I mean, there's Section 179 expenses that, and I would say, help the business. You're able to write off a ton of the amount of the actual auto loan. So I think that's an excellent opportunity for you. The other key piece is looking at business, the business credit card piece, and we're going to touch on this a little bit in the coming slides, but utilizing resources to where you can save as much money as possible and reduce as much debt as possible. If you're able to reduce your debt and you're able to get the best deal, that's how you build the equity inside of your small business. So we can go to the next slide. We can go one more down. Let me see. Sorry about that. Yeah, we can go one more down. I'm sorry, Stephanie. Yeah, right here. This is the screen I want to go to. So saving and managing debt, I feel like these are parallel and they go hand in hand, because if you're able to manage your debt, it never gets away from you. You understand what you're spending, you understand what you're paying for. So you'll never have to worry about overpaying for something getting out of hand. I think as 2020 showed us, it's better to be proactive than reactive. So in this particular case, when we talk about managing debt, borrow only what you need. This is a great statement in the sense that sometimes we borrow a little bit more, whether we're getting a line of credit for way more than what we need, or we're getting loans for way more than what we need. I think what needs to be understood there is, if you borrow more than what you need, you're going to feel susceptible to spend that money, to essentially buy stuff for the business you don't need, buy fancy toys, buy things that aren't profitable. So keep it short, keep it sweet, only buy things, only borrow what you need. Making sure you understand your loan's terms, interest rates, repayment options. This is very key. A lot of times there's balloon payments, there's certain jargon that's written in the fine print. Make sure you ask a ton of questions when you are signing up for your loans and enrolling into your loans. Make sure you understand your interest rate. If it's a variable interest rate, make sure you ask the question of what happens 3 years from now. When if prime changes, what happens 3 years from now if my rate goes up? You could go from having a 7% rate to a 25% rate. You want to understand all facets. Repayment options are extremely key, because with repayment options, you have to understand the terms of, okay, what happens if I don't pay by this time? But also, what happens if I repay early? There are prepayment penalties that are ingratiated inside of your loans that if you don't know about that, you can end up paying a ton of money. So what might seem as a good day for you in terms of, hey, I got a 10-year loan, I'm about to pay it off in 5. Well, make sure that you don't have any prepayment penalties that would prohibit you from paying that off so early. Calculate what you'll be obligated to pay monthly and make sure your business income can support it. I mean, I think that's checks and balances right there. That's day to day. I mean, you do that in your personal life. You do it. I think you do it to a larger degree in the business. But again, if your business income can't support what you pay monthly, well, maybe you got to revisit some of the things that you have, some of the debt you already have. Where can I find places where you can reduce some things? Can I pay off a credit card, business credit card this month and not have a payment? So that reduces. Can I put some of these expenditures on a business credit card instead of utilizing all of my cash so that, so that I have equity built up, so that I have a rainy day fund, so to speak. Always include the loan payments in your budget, in your budgets. I feel like loan payments are kind of tough because, we don't necessarily include them in the budgets because they are recurring things. I always say include it, because if you include it inside of your budget, when you look at if whatever money that you have left over, that's a more accurate vision of what kind of monthly income you'll have and what kind of cash flow you'll have. And the biggest key is working with a financial professional if the amount you're borrowing is substantial. I think you should work with a financial professional, even if it's minimal, just because there are some things that you may not have a ton of information about. This is the point where you drop the pride, you drop the ego, and you ask the question. I always say the joy is in the answer and the journey. It's not in the ego. So I think at that juncture, if you have any questions at all, because ultimately this is your future, this is your financial freedom, this is your dream. Make sure your dream doesn't crumble because you didn't want to ask the questions that were necessary. We can go to the next slide. So I'm going to talk high level about building business credit. So you can go to the next slide. So secure cards are good. Secure cards, so they may be good. They're good and bad for business, right? I think secure cards are great for business because, as it alludes to here, you make on-time credit, make on-time payments. It helps you rebuild. It helps you improve the business score, and it also can help you for future loans and future financial products that may be needed. However, you have to also understand that a secure business card is very, very equivalent to a secure personal card in the sense that it means you're rebuilding or improving something. So when financial institutions or underwriters, et cetera, are looking at that, the first question that they're going to have is, okay, why do you have a secured versus an unsecured card? Of course, there are such things as being conservative and being cautious, but an unsecured loan, a secured card really only goes as far as how much you invest into it. So if I want a $10,000 balance, I got to put $10,000 of my own money up or of my business funds up. When you talk about applying for loans and building your business score is very important. Your B score is very, very important. This is a great tool. I would say only utilize this tool if you absolutely must. If you need a few months or you need a year or so to kind of rebuild, this is a very popular product as of right now. As everyone went through COVID, we all saw the impacts of that. So this is a very, very, very good, useful resource. But if you don't have to utilize this and you can utilize business credit cards, I would definitely make the recommendation of doing so. We can go to the next slide. So as I alluded to with borrowing, right? Gathering important documents. Here's the thing that I think is the most important when we talk about your business. Organization in detail. You want to always have your personal information, tax returns, debt schedules, et cetera. You want to have all that information up to date as often as you can. I understand that in the day-to-day business, it is very hard to keep up with that. It is very hard to manage it to a T, but you want to make sure that this is as accurate as possible. Because when it comes to applying for business lending, small business lending, everything is meticulous and granular. And the things that you don't think underwriters look at, trust me, they do. I mean, they're digging back all the red tape, they're in the weeds. So being able to have everything organized and being able to justify and mitigate any risk that they see, that's a very, very, very huge ordeal when you're talking about borrowing. So as it says, business plan and financials, making sure that you have your financials and making sure that you can speak to your financials. Any of those itemized expenses that you see on your statements with business tax returns, make sure you can speak to them. If you're, let's say your telephone and utilities was $10,000 last year, but it jumped up to about 40,000 this year. Make sure you're prepared to speak to what caused the increase to that expense and what caused the variance and change from year over year, because that's huge when you can speak to your own story. Also think when we're speaking about borrowing, we talk about cash flow, we talk about, large purchases. You have to determine what your business needs and determine how soon you need it. Lines of credit are always a great opportunity because they afford you the cash you need in a timely manner to make purchases, bridge gaps. If you have a float time or if you're floating purchases, maybe vendors aren't paying you back, as fast as you need. Lines of credit are always a great opportunity, but you have to determine what you need. The what is so much more important right now than how, because I think one goes hand in hand. Once you determine what you need, then you speak with your financial, whomever your financial counsel may be, and they can determine the how and, the where, the when, et cetera. We can go to the next slide. And as I just alluded to with a line of credit, that is, like I said, such a great opportunity. There's two different types of lines of credit. There's the secured line of credit, and then there's an unsecured line of credit. The unsecured line of credit is generally what most businesses go for. However, the amounts on those lines of credit are capped. So you're not going to always, a lot of times businesses will say, well, we need about 300 to 400,000. Well, the moment you start getting into that terrain, you're going to have to essentially go secured because that's a larger amount and that's a lot of money to have at risk that can't be recouped. So secured line of credit, unsecured line of credit, biggest differences there is going to be fees, rates, and I would say difficulty of the process, because sometimes secured lines of credit require more documentation than an unsecured line of credit. We can go to next slide. Small business loans. So there's traditional and there's non-traditional. I would say both of these, your traditional loans are going to be, your commercial real estate loans, acquisition loans, just any business loan, refinances. Those are all cash outs. Those are all going to be your traditional. Your non-traditional loans, those are going to vary from institution to institution. Some institutions offer an array of products that are more tiered towards, a certain businesses up to certain revenues. Some financial institutions may offer some caveats with some of their more traditional items that make it non-traditional. So this is a very, very different, it's hard to kind of separate the two because it's really based on the institution and the products that they offer. Go to the next slide. So when we talk about CDFI loans, as it states, Community Development Financial Institutions, these right here, these loans, so these are institutions that essentially will do loans that maybe the bank won't do. Maybe the client needs a little bit more assistance. Maybe the criteria is just a little too strong for their qualification. These CDFI loans are, like I said, different resources in different institutions that will help with small business loans. To give you a real life example, I have a client of whom, we didn't quite get to the bar with where we wanted to as far as getting them a commercial loan, but through our partnerships with CDFI loans, we were able to find a financial institution that was able to work with them and help them secure financing. So listen, the resources are endless out there. As it states right here, this cdfifund.gov, this lists a ton of the institutions that are available locally. So I would highly recommend that, this is something that you look into, because this is a great opportunity for a lot of small business owners who don't think that, business lending is possible. Okay, so can we go to the next slide? So reasons that small businesses fail. Number one, well, I don't think it's going in order of one, chronologically, but I would say one reason is lack of planning. Not looking at the scenario, and again, this goes back to being organized. This goes back to looking at your business quarter over quarter, understanding your trends, understanding your highs, your lows, where we're good, where we're bad, and being proactive to understand, okay, you know what, our sales are down a little bit this quarter. We may need to add additional incentives. We may need to market a little bit more. We may need to add more people to get more production up. How can we get better? So I think essentially preparation, I think, is the biggest key when it comes to reasons small businesses fail. They're not proactive, they're reactive. Can we go to next slide? Slide after that, sorry about that. Yeah, so we talk about lack of research. So when we talk about lack of research, this is, again, understanding your industry, understanding your competition, and then most importantly, understanding your customer. I think knowing how your industry is doing, if your industry is suffering nationally, that gives you an opportunity to figure out, okay, what can I do different? How can I stand out? And how can I keep my business afloat? Understanding the competition, benchmarking, occasionally looking at, okay, what are some of the things, picking their brains? What are some of the things they're doing? What are they doing in the community? What kind of marketing are they doing? How are they getting the responses that they're doing? And then the last thing would be understanding your clients. Talk to your clients. Understand, hey, what would you like to see more of? What did you like about what we had to offer? How did you like our process? What kind of trends are you seeing out there? What are some of your peers, family, et cetera? What are they doing? And what kind of businesses are they shopping at or investing their money into? Understanding the market is, I think, probably the biggest thing that you can do in terms of research, because it keeps you ahead of the curve, it keeps you fresh, and it also keeps you competitive and hungry. Go to the next slide. And go one more down. So not getting support. This right here, I agree with this in the sense that as your business grows, you always want to have a support group. You always want to have a network that can help you. I think building advisory boards, building in your community, just really understanding from the community. If you have a pulse of the community, you'll always have the support. You'll know what they like, you'll know what they do not like. You'll understand, where some of their reservations lie. You'll understand where some of, your opportunities lie to be better, to be a better business owner. But you have to gauge the community. You have to get out online. You have to connect with, your clients, and you have to build a network so that you can understand and always be in the know. Go to the next slide. And down one more time. So when we talk about, so another one of the reasons businesses fail is insufficient funds. Listen, a lot of times with the overdrafts and the insufficient funds, what happens is you lose track of some of the debits and you lose track of some of the expenses that you may have coming out. A common error I see and a common roadblock that some of my clients run into is that they'll set up recurring payments, but it'll come out of the wrong account. We'll have several different accounts, one for payroll, one for operating, one petty cash, et cetera. And we'll set up a larger expense that's due to come out, such as payroll, but we'll have it come out of the wrong account. So again, being organized, being observant, understanding your business, understanding the billing, and understanding where your money's going, understanding what your expenses are. I think that can proactively help you avoid getting into some of these ruts. The other thing too is the taxes, paying quarterly tax payments, getting ahead. One quarter may be better than the other. One half of the year may be better than the other. The more debt you can reduce and the more you can get down, the more you can avoid these things. Insufficient funds is not uncommon, whether it be personal or business. It is very, very common. And just to avoid it, the other thing, make sure you stay in contact with your banker. And if you don't have a banker, I highly suggest you get out, introduce yourself, and get you a small business banker, because that is one of the easiest ways as well to avoid some of these insufficient funds and avoid some of these holdups that could potentially stop your business. And we can go to the last slide, number 5. Okay, when we talk about loan mistakes. So again, I alluded to this earlier when we spoke about understanding your loan. You must understand all fees. You must understand all facets of your loan. Unfortunately, I've seen where clients didn't understand the dynamic of a balloon loan, and at the end of 5 years, they get a bill and it says, "Hey, you now owe 16,000, blah blah blah." And of course, they're like, "Hold on, wait a minute." But understanding what a balloon loan is, understanding that after 5 years, you're going to have to pay a large lump sum of money to pay that off, or you're going to need to refinance it. Again, reach out to your support system, reach out to your business, your small business bankers. If you have a financial counselor, reach out to them. Don't take on more than you can handle. If you're going to be taking out a loan, make sure that it covers everything that you need and only what you need, because a lot of times you want to take out as much money as possible, not knowing if you'll ever get the opportunity to do that again. And that's exactly how you drive yourself into the ground. We can go to the next one. Losing focus on cash flow. Again, like I said, a lot of these topics and a lot of these reasons are going to be redundant. It's going to be a lot of information that overlaps. I'm a firm believer, if you do 2 of the 6, you're doing all of them. If you don't lose focus on your bookkeeping, if you manage your expenses, and if you're observant of your business, if you understand each month where your business is at, how your business is performing, your expenses, are they remaining the same? Are they trending higher? If you understand all the nuances of your business, I think there's no way you can lose focus on cash flow. It's too important. It's too important. I mean, increasing your cash flow should be the number one goal of the business. You can't have a successful business without having a successful and stable cash flow. So at all times, please make sure that you're paying attention to your business cash flow, your expenses, and all income that's coming in. So we can go down to the next slide. So key takeaways. 1, consistently managing your business finances by creating a budget, saving, managing debt. This is what we've alluded to. Consistently being present in your business, consistently understanding your business. Being a successful business owner, I think, yes, it's a lot about sales. It's a lot about, obviously, performance. But the biggest thing, it's about being observant. It's about understanding. If you know how your business is operating and you understand all facets of your business, I firmly believe your business will be successful, because you're always going to be ahead of the trend. You're always going to be proactive and ahead of any curveball that you may be throwing. We talk about consider getting business credit cards to make purchases. Remember to make timely payments, only charge what you need. To shed a little bit more light on this, I completely agree with this. Listen, If you don't have to spend your money and you have the opportunity to spend the bank's money, please do so. Save your money. If you can get a business credit card at 0% for 7 months, that's 7 months you have with no interest to put all of your expenses on there, potentially earn some cash back, earn some rewards, and then you can start paying that balance down at the end of the 7 months when you've built your equity up for 7 months. So at that point, your bank account has increased. Yeah, yes, I understand the credit card debt has increased as well, but you are more suited to pay that off at the end of the 7 month period now that you've been able to stack up some good equity. Small businesses can borrow money in a variety of ways. I completely agree with this. There are so many different ways to obtain lending, financing, to obtain capital, period. I think the best course of action for this is speaking with your financial counsel, speaking with a small business banker, speaking with a branch manager to understand what your situation is and what your situation needs. I think somewhere along the line, ego and pride jumped into business. And instead of asking the folks who do this on a normal basis, I will say banks have got a bad reputation, but that's sort of change. No, not sort of, it is changing day to day. As we can see where 2020 took us, utilize your resources, utilize the folks in these banks, in the branches that can help you. Small businesses often fail due to lack of planning, research, support, insufficient funds, loan mistakes, and poor cash flow management. As I stated earlier, the name of the game is not how much money you can make, it's how much you can keep. Your actions, your day-to-day actions are always going to dictate how well your business does. So make sure you're planning, make sure you're researching, make sure that you're meticulous and you're very granular with your information and your business so that you can avoid some of the roadblocks and some of the hurdles that you will be setting yourself up for down the line. I cannot stress it enough. It is so much better in small business to be proactive than to be reactive. So with that, we're at the end of the road with the presentation. I wanted to take this time to open up to any questions that some of our small business clients have for me out there. I'm looking forward to answering.
Sorry, I was trying to unmute myself. This is Stephanie here. So we do have a couple questions that came through. Just give me a moment. And thank you, Stacy. That was a great presentation. So first off, the number one question is, are we able to share these slides?
So we are not able to share. I don't think we're able to share these slides. I think this is internal. It is a internal. Give me 1 second here. I apologize. Let me look and see if we're able to. If we are able to get these slides to you. Give me 1 second. I apologize. Stephanie, I'll tell you what, I'll get back to the group on that. Oh, perfect. I just got the word. Yes, we can share these slides. Thank you.
Awesome. So I will be sharing these slides along with this recording to everyone who registered. It's also going to be available on the Foundation's YouTube page. So you also mentioned, Stacy, that this was a high-level presentation. Where can someone go, an entrepreneur or small business owner, go to receive more of like an in-depth presentation on better money habits?
So that's an excellent question. What I would suggest, if you want a more in-depth and you want a more granular presentation, I would suggest going to your local bank or going to whatever financial institution you utilize, setting up a meeting with your small business banker. That way, not only do you get the granular and the more in-depth presentation, but you also get a personalized presentation, which I think will tier and it'll kind of adjust to you as the small business owner. One thing about small business owners, each situation is different. So I think a universal presentation may not reach and it may not apply to all small business owners. So the easiest way I would say, connect with your small business banker, connect with your financial institution so you can get some time on the calendar so that they can provide you all of the education and provide you all the answers that you see.
Perfect. Now, when an entrepreneur is ready to get in touch with a small business specialist or small business banker, what should they have prepared when they first go into that first meeting?
That's an excellent question. I think the biggest thing that you should have prepared is the plan. And when I say the plan, it's the what. What exactly do you want? What do you want the power to do? What do you want the power for your business to do? Because for us to tell you what's possible, and for your council to tell you, uh, what you need to know, you have to come prepared with the plan of the what. What is it that you're seeking? Are you seeking to get? Are you seeking to get the best rates? Are you seeking to kind of jumpstart your business? Are you seeking to um, clean up some bad habits that you have? I would say understanding what exactly you're looking for and what you're going after, that to me is the biggest opportunity you can bring to that meeting.
Okay. How does a new business obtain a business credit card to help with building their credit?
So there's a very simplistic answer to this. I know it sounds very hard, but going to a bank and simply stating, I want a business credit card. I think a lot of times the process is made out to be more complex than it is. If you go to the small business, before you go blindly applying, make sure you go and speak with your small business banker so that they can tell you the nuances of the card. They can get some small information from you in terms of revenues, what kind of expenses you're going to be looking to make. Because one, you want to make sure that the card is the right card for you. Two, you want to be prepared and understanding, if it's even worth applying for the card. Because they're going to be very honest with you. They're going to be transparent, never brash, only want the best for you. But I would say before doing anything, before going and just clicking submit and submitting an application, just take a few minutes to speak with a small business banker, or speak with some bank representative to understand the card and understand if it can work for you.
Okay. Now, what advice? So I'll preface this by saying this: in working with the entrepreneurs through our E3 program, we received a lot of feedback from several of our entrepreneurs about being nervous and a little bit hesitant in taking out a loan or requesting a line of credit and working with banks in general. And I think you kind of touched on that a bit. What is your advice to those entrepreneurs?
Well, I mean, when we say nervous, I would have a question in terms of what are we nervous about? Is it nervous or is it fear? Is it the fear of not being approved or not getting? Or if we're saying nervous, are we nervous about what the market is going to do, what the economy is going to do? Am I going to be on the hook for, a large business loan? I think when you become a small business owner, there's risk and reward, right? In the process of applying for a loan, every institution pretty much has the same curriculum, same criteria, same documentation that's required. So it doesn't differ from place to place. If I had to give any advice, I would say shed the nerves, have the conversation so you can understand fully. Because I think having a full understanding and education of something breeds the confidence for it.
Do you think accessing the Better Money Habits program or learning more about that online can help shed some of those nerves and answer some questions ahead of time?
I think so. I think that's part of one of the ways to avoid a failing business is doing the research. I think if you go on there and you look at the small business, the Better Money Habits, I think that in and of itself, I think that will help. This will answer some of those high level questions you have. And again, if the question becomes more granular and you need it to be personalized to your business or situation, just pick up the phone and make a call to your small business banker.
Perfect. And I've included the link to Better Money Habits in the chat for easy access. Awesome. And then my last question that I'm seeing coming through, I think we answered it. Oh no, my last question is this. So you touched in talking about banks having a negative reputation in the past and getting better at that. What are some of the things that the banks are doing to make themselves more accessible and more approachable to entrepreneurs, specifically entrepreneurs of color?
That's an excellent question. I think banks are offering up more resources, having more conversations now. Whereas, especially as it pertains to, business ownership in the Black community, in the minority community, in every community. They're having the conversations, which is great. But I think also there's been a huge switch in the last year that I don't think a lot of people paid attention to. Banks are now giving the access. They're now giving the resources. Before it was this summation that bigger banks look at you as a number, which is not, it's not true. What banks are doing now is they're taking the time to actually put the resources out there to identify this is what we offer. This is what's available to you. Here's how you get it. Now, the key is having the small business owner. Is your pride keeping you away from essentially having that conversation? We're all human. No one wants to hear no. No one wants to hear you're not qualified. No one wants to hear anything that suggests failure or suggests neglection. But you have to have that conversation. And I think what the bank has done a phenomenal job is open up the lines of communication. We're having that, we're providing the education. We're also letting small business and entrepreneurs know, hey, listen, this is how. Here's a small roadblock along the yellow brick road of how to get there, of what to do. I don't think those resources were readily available previously. I think we've come a long way. I'm excited. It's nothing greater than seeing a small business owner succeed, seeing an entrepreneur start his dream. Again, the lines of communication have been open, and I think that's the biggest thing that all banks have done, not just Bank of America, but all financial institutions. We're listening more. And I think that's a huge, huge thing in today's world.
I think that's very refreshing to hear. Now, I think you touched on a great point. I think it's just general human nature to be afraid of the word no. Through Better Money Habits, is there a way to connect with a small banking specialist virtually or on the phone before an entrepreneur takes that step in going into a financial institution in person?
Yeah, that's a great question. So I'd be remiss if I didn't solicit myself. I am a small business banker here at the bank. So if you read through our Bank of America our Better Money Habits, and you do have questions or you want a more personalized approach to understand before you take any leaps or bounds, you by all means reach out to me. I have well over 1,000 clients in the market. But the one thing I pride myself on is being available. Your best ability is availability. So being available to my clients to be able to have that conversation. If anyone has any questions or they have any other, or they want, like I said, a more in-depth look at their situation specifically, just reach out to me. I would love to go over your situation with you. Would love to go over what resources we have to help build your business.
Awesome. Thank you, Stacy. I will definitely share your contact information when I share out the materials from today's webinar. Those are
Absolutely.
all the questions that I have that came through. Any last minute takeaways that you have?
No last minute takeaways. I wish everyone's business success and wealth. And again, the biggest thing I say is ask the question. What do you want the power to do? Where do you want your business to go? Please don't refrain from communicating with your local banks, financial institutions. They hold the keys to the vehicle of success for your business. Thanks for having me today. I really, really appreciate this.
Thank you, Stacy, and thank you to Bank of America. We appreciate your time, and this was a great discussion, and I look forward to sharing it with all of our entrepreneurs.
Thank you so much. Have a great day.
Have a wonderful day.